Welcome to the upstreamlife.com. I'm your founder and editor, Vishal Krishna. My guest today is Sandeep Murthy, the founder of Lightbox Ventures. It's a VC firm that has been part of the Indian ecosystem for a decade now. In this episode, we're going to talk about the trends in the VC ecosystem in India and the sectors that interest Lightbox. Sandeep, how are you?
Hi, good to see you, Vishal. Thank you for having me.
Yeah, I mean, the last time I saw you was at ClearTrip. Okay. And then you obviously, the Kleiner Perkins world, then this happened with you 10 years ago. It's almost a decade, right? Or just slightly more than a decade.
Yeah, it's more, man. It's been a journey. I mean, I think that if I think back, and I've had the need and opportunity to reflect quite a bit over the last couple of months in the last year. I think that when I started here in 2005, which was with Rahm and Kleiner, you couldn't find an investor. There was no public money. There's no money looking to invest in private investments. There was no angel funds. I remember actually Sasha and Kay when it was 4K, it was Mumbai Angels he set up. He and I met and he was like, I'm gonna get some people together. We met in a conference room at the Intercontinental Hotel or the Marine Plaza Hotel. And there were 5 people, and this was the Angel Network. And from that, it turned into Mumbai Angels. From that, so it's been a great seat to watch how it's evolved. But in it also, I think I've evolved my thinking on what I think the venture opportunity really is. And it looks very different. And I'm happy to kind of, as we talk more about it. But yeah, it's been a while, is the short answer. It's been 20 years of doing this, which is why I kind of now feel like, okay, I have a reason to have views on this and a perspective on what's changed.
India has changed. I mean, look at 10 years ago, the way people dress now is very different. I remember meeting Kishore Biani back then, and he would say that Indians, I mean, the girls are wearing kurta and jeans now. But today, the dress code is so different. I mean, young people being so expressive. And wouldn't you agree with that, the way it's changed?
I mean, it's also a function of it's an interesting dynamic if you think about it, because you have exposure through media, through online, to everything that's going on everywhere, and so
Yeah.
suddenly it's very hard to not get influenced by what you see peers in other markets doing and wondering, okay, well, the same thing can happen here, and the same way it can evolve here, and I think that that's the kind of dynamic that's at play, where you're on one hand the very interesting core cultural values that exist, but you have exposure to a very broad Western dynamic as well. And as those two come together, I honestly get a little worried that we lose. So on one hand, yes, we're dressing Western, thinking in those regards. In the West, they're adopting fasting and yoga and everything else. So they're taking our stuff and we're taking their stuff, and I'm not sure who's getting the better end of the bargain in all of this. So,
I agree with you. I mean, there's a lot of import from India for the world, but we have to get. I mean, it's look at organic food, right? I mean, it's. I mean, we were so used to organic food maybe 100 years ago. It's gone all the way to the US and it's now coming back now. It's so interesting, these events, content and storytelling. I mean, a lot of the content was LA was the place to tell stories. Now it's all over the world, and India is like telling stories like no other, right?
and I think that I mean, so it's funny because a couple of years back, we started to talk a lot about soft culture and the idea that we are increasing our impact globally by virtue of a variety of the things that we're exporting. I mean, now we've started to export cricket. And I mean, whether or not the first, match there was a success or not is a secondary thing, but it's going to happen. I mean, it's going to happen in that way. And I mean, the whole fact, I think that there are so many great components to it. And I really hope, and actually, you were talking about Kishore, we were talking about sort of the apparel industry. And you look at the brands that were created in apparel in the past, it was all Western names, Peter England, Van Heusen. I
Yeah.
mean, you're looking
Louis
at
Philippe.
Philippe, right? Looking at white models, in Western settings and everything else. And I think now that there's an appreciation for local as well. And I think that that's starting to happen in a different way. And I think that that pride has to set in. And I really hope, and I think that's I'm look, we're supporters also of the Olympic quest for gold, and we get involved in some of that. So we watched how the Olympics went this time, and again, it's surprising to me. So many people, we're only scratching the surface now of actually starting to make an impact in some sports there. I mean, this is going to take a movement. And I think as those things happen, that's really the hope I have over the next 10-year period, that as we see our economy grow, your 4 trillion to 10 trillion, all this kind of stuff happen, brands will get created, lots of different things will
Yeah.
happen. But what I also do hope happens is a pride develops in a different way. And I think that comes from the kinds of things that will be built out of here. And that's what I'm hopeful to be a part of.
I know I like that because you're talking about the macros about India and how consumption's growing, how there's a lot of pride in building in India for the world, maybe. If you just follow Instagram, Sandeep, today the number of brands that are advertising, all of them made in India, it's interesting from shoes to apparel to food. There's so many experiments happening. Uh, this is an interesting segue for our conversation because you bet on consumption in a very different way. These companies, startups should be tech enabled too. Do you see a lot of these brands enabling themselves with tech, building their own tech, understanding data? A lot of life is easy now. Generative AI, you can write great copy. You can generate code very fast, and all the things that is necessary for a young brand to go build stuff, right, Sandeep? Do you see Indians embracing that very fast, and do you see that matching with the consumption that's going on in India?
Yeah, so maybe like if we take a step back and say, why is this even possible right now? And I think that for me, the starting point, let's say, is that let's take apparel as a market. It's a $70 billion industry. The
Yes,
two largest players in the market are Zara and Zudio, who represent collectively about 1% market share. Which for any segment, if the two largest guys have only 1% market share, means that the rest of the thing is absolutely insanely fragmented. And so
correct.
there's going to be an opportunity for brands to emerge. So what's also quite compelling, I'll give you another analogy. If you look at the QSR space, the quick service restaurant space, in the US, you have 75 brands that have over 500 locations. These are your Applebee's, Denny's, McDonald's, Burger King, Subway. In China, you have 35 brands that have over 500 locations. In India, we have three. And those three are foreign brands: Subway, Domino's, McDonald's. Now, Rebel kind of has emerged in that group as a
I agree.
QSR, cloud-based, cloud kitchen-driven set of internet brands. And now they've got multiple brands that have over 500 locations, and that will continue to grow. Now, that means, what does that mean to me? That means that there's a lack of incumbency. So if you're a new brand in the apparel space, or if you're a new brand in the sneaker space, you're not necessarily competing against these large marketing budgets that exist from large companies. You're competing against small mom and pop shops. And if you talk to the FMCG guys as well, a lot of what they say is, listen, it's interesting to see startups coming, and that's fine, but they've been dealing with competitors at the small level for years, decades. And they're saying, listen, those have been our biggest pain in the neck because those guys operate at a cost structure that's different. They have a distribution model that's different. They have access to customers that's different. They understand their customers in a localized way in a very different manner. So if you're going to compete with that, and again, if we just take retail, if I look at competing with a Kirana shop, a Kirana shop in general has more cases than not no real costs. They don't really pay rent. They don't really have employees. They don't have infrastructure in any way. They don't have marketing costs. Now you're going to show up and say, I can compete with that person in a different manner. It's going to take a lot of money to figure out how to do that, which is what you see happening, whether it's in e-commerce or whether it's in quick commerce. The amount of capital required to actually compete against those people is significant. So I'm jumping topics, but let's stick with this for a second. So now you've got distribution that's going to get organized in one way, shape, or form. As that happens, you're going to have consumers move up a continuum from their basic needs to now wants. As distribution gets organized, consumers move up. The opportunity exists to now come and present them with something that stands for something. So you're becoming a sneaker brand. Great. What do you stand for? And if you think about what does brand mean? Brand means, look, I'm going to stand for something for you. I'm going to deliver that to you on a consistent basis, and I'm going to win your trust by doing that. Now, that's interesting if you can do it correctly and if you can do it repeatedly. My worry sometimes is we have a mentality, I think, in India of jugad, and that jugad causes that ability to deliver that brand promise. It makes it very difficult because you can't be consistent in it. And so now, coming to your original point, tech enabled, yes, absolutely. And there will be basic things that will allow it. So when I think about tech, I'm saying I want to see where tech makes an impact in your financials. So coming back to Rebel, tech has a big impact in something that doesn't often get talked about: wastage. If I look at restaurants, you have wastage take place all the time. You just can't predict what's going to get bought. You have to buy stuff, you're throwing it. 8% is the average wastage at a restaurant. Rebel's wastage is around 1.5%. That's tech being used to intelligently change things. Because of tech and because of the operating system that operates behind Rebel, you can now make decisions on where to introduce new brands without having to incur massive capex. So there you go. That's another financial statement, tangible impact on how that business can be better than the legacy version or the fragmented small mom and shop version of it. So I think that yes, sneaker brands will come and yes, different things will come, but I would really want to push to say it's not about look, your copy will get generated. Everybody can do that. Or you could argue that I use email, therefore I am tech enabled. That's not it. We really have to say, do I believe? And I'll give you one more example on this. If I take a business like Bombay Shirt Company, and again, we've looked at apparel a lot. So we're investors in that. We I don't think that I'm smart enough to figure out if a brand will be successful for the long term. I think I'm able to understand if the proposition can work, if there's something in the system that gives it an intrinsic advantage or not. But will X brand be hot 10 years from now? And because when we invest, I've got to take a 7, 10 year view. And when an entrepreneur is building it, hopefully they're taking a much longer view. I would rather invest with the idea that, look, there's something intrinsic in the way you operate that creates an advantage. Now, I can take a bet on whether that advantage will play out, whether you can execute it correctly. I'm willing to take those risks. And so if I look at it, Bombay Shirt Company is, can I create customization at scale? Can I enable people to get a product that fits them better, makes them feel better, makes them more invested in what they have, therefore they are less likely to get rid of it, which is another big thing. Another topic, ESG and environment, all the things. I'm going to stop for a second
No,
and
that's
pause here.
interesting. I like what you're saying, because you're saying tech enabled really doesn't mean just copy or just put in a copy and just do some advertising and marketing around it. It's much more deeper. Can you align your supply chain to bring down the costs? Can you reduce wastage? Which is so true. I mean, I keep talking to one of your investee companies, and I talk about way cool, right? And I talk about why there are so many supply chain losses in India. They said 35% of value is lost in the supply chain, and there's also a 35% nutritional loss because of that supply chain. uh, so you're saying for the first time, do you think with the GST coming in, logistics changing, do you see technology being really put to use to reduce that wastage? And I'm really thrilled to know that Rebel Foods, the wastage is only 1.5%. Just yesterday, there was an investor asking me, how does a restaurant business run? And is it really interesting to invest in restaurants because they don't last about 5 years? So it's an interesting statement you
No,
made.
actually, on restaurants, the numbers 50% fail in the first year, 80% fail within 5 years. And
Wow.
so, and it's hard. Like, and actually, it's an interesting dynamic when you think about Zomato and Swiggy that the continual churn that will exist in their supply base will lead to some thoughts around how do you build a brand in that ecosystem and what will work there if that becomes primary distribution. And that's why I think Rebel's in a really interesting position, because now once you've got scale in the entire way in which the product works, you've got an operating system that allows the business to effectively manage multiple brands and multiple kitchens. You've got a kitchen network that's distributed. You've got products that you can keep feeding in. You've got this foundation that becomes very hard for somebody to replicate. But coming to your question on your statement on Waycool, that's exactly, it's interesting. We're consumer fun. We're interested in consumer brands. And we went and looked at the food space, and we started to look at a lot of the different opportunities within food. And we started to realize that, look, most of them were taking a lot of money and trying to build a consumer brand, which is fine. And so you can build a brand to the consumer, but at some point in time, either the money's going to run out or it's going to get very competitive. So then your advantage has to come from how is your actual product made. And when you start to think about food as a product, it's the question of what does your input look like? And how do you have an advantage on the input products side? That then took us to Waco because we said exactly what you point out. There's 33% wastage from the farmer to the end consumer. And that's because the product goes through 7 different hands. And in a system where it's falling off of trucks, in mandis where there are cows and dogs walking around, you have absolute criminal wastage of food going on. Now, if you can just manage that better, which is again, it's an operational problem. It's a process problem, right? Which is solvable. These are not rocket science type things. This is okay. Can I track a product when I get it from the farmer? Can I bring it back to the warehouse correctly? Can I have a customer ready for it? And can I ensure that it moves out of my warehouse within, let's say, 24 to 48 hours? If all that happens, my wastage goes down to 1%. That's huge. So that means now the yield that you're getting is so much better. That means now if I create branded products from the potatoes that are coming, from the rice that's coming, from the dal that's coming, then suddenly my effective price point of each one is much lower and my quality is much higher. That's huge. So therefore, actually, Waycool moved, and it's interesting. The name Waycool comes from. It started off as a cold chain logistics business. I mean, Waycool
Absolutely.
is like a very, very hip name, but if you've met the team and everything, they are very straightforward, hard-nosed operational people. They're not like
Absolutely.
t-shirt wearing sneakers guys. They're different, and
Yeah.
but they built brands with that, which is huge.
Which is interesting, right? Again, going back to the brands, there are brands in restaurants, there are brands in these commodities that Waycool handles, organizing the commodity space. The interesting aspect here is again technology, and that technology is what do you think more Indian startups will understand technology or just be trade? I have this mindset, right, that Indians have been traders for far too long, especially the
Hmm.
brand side. It's always an arbitrage around, okay, what's done in the West, let's launch something cheaper here. For example, you talk about the Vibram shoes, the running shoes, right? You have people who work there now who have launched stuff in India. And then, the only thing that disappoints me is the quality when it's a made in India thing. Again, going back to the same ethos, what is value? Why is the customer paying you this value, right? Why does he enjoy this product? Do you see that being answered now, at least from an Indian perspective? I know we've got the tech story, right? The SaaS part of it. They're also organized, they're also successful. But I still, although there are many brands, they say there are more than 50,000 Indian brands now. I was talking to somebody from the distribution side. They said a lot of these startups are not making money on the brand side. Uh,
Yeah,
but I think it's an opportunity. The next 5 years we'll have more brands. I'll probably see 1 or 2% succeed. Maybe I don't know.
I think that listen, the what we talked about at the beginning, people are getting greater exposure. So as they're getting greater exposure, they're getting greater, they're having higher standards. It used to be in the past, okay, you want a car? I'll put four wheels in a box and there's
Which
your
is
car.
what we did. Which is what we
Right?
did.
It's your ambassador, right? You had it, it worked, don't bother me, move on. Now, for for all the reasons of growing per capita income, growing exposure, everybody's getting interested in the market. And so suddenly you're saying that, okay, fine, I'm a global guy, I'm going to come here. And let's just look at the EV space. If you look at the quality of EV cars coming up and the attention that's being paid to the types of vehicles that people are bringing into the country, price point is exorbitant, and that's fine. But if you're going to be a local player trying to compete in that space, you're going to have to meet a quality standard that's going to be much greater than it would have been had those global players not been here, because people are exposed to it and aspirational about it. And I think that that is going to uplift everything. Now it's going to take time because there will always be people who will want to cut a corner and always believe that no, 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 I can build the cheap version, whatever, I'll extract my margin, I'll live. They won't last. And like you talk to a lot of the large FMCG guys, they will say that, listen, it's fine. These are brands today. They're not, in their context of a brand, they think about it, is it a 50, 60, 100-year brand? We're sitting here saying, okay, you're a brand for 2 years. I'm not that worried unless you have product innovation, and you have to invest. You have to be willing to make those investments. And I think that that's going to come to bear at some point soon. And I think that also as per capita income grows, all these things, right? You're going to see manufacturing come. So let's talk about how that's all going to happen. Because a big part of this is
I
India has a
agree.
story happening, it's happening, it's happening. But it's got to start to, the drivers are there in a more tangible way today. And I mean, what I mean by that is to say, we're not going to get there on services jobs at all.
You
We're going
said
to
it.
need
I
the other.
agree. I agree again. Yeah.
And so you're seeing more and more of the large, and actually we have a slide that we went through in one of our presentations where we said that I think it was 2009, India and Vietnam's electronics exports were at the same level, um, roughly, let's say 6 or 8 billion. Then I think by 2019, Vietnam's has gone up to 110 billion, and we're at maybe 15 or 16 billion. So what happened? In 2010-11, Apple, Samsung, a variety of global consumer electronics companies decided to locate in Vietnam. They were given incentives to do so. And that built an entire ecosystem around it that built up their manufacturing capabilities. That's going to allow them for domestic brands to grow as well, because you start to get trained in a different way to do things. Today, if I look at what's happening in India, Apple's setting up, Samsung setting up, Micron setting up, everyone's setting up. In the next 10 years, all of that's going to enable an ecosystem of suppliers to get organized around it. Those suppliers are going to find local companies that are now going to want to source as well, and local brands will get built. We're going to create that ecosystem, and it's ours to kind of lose at this point in time, which is why I think someone said the
You just read my mind. You just read my mind, Sandeep. It's ours to lose it. I agree. Go on. You're saying I interrupted. Sorry.
the five most dangerous words in general are this time it's different, and I think that that's the concern I have though, because I've been saying this story for 20 years. I came here with that thought that we're on the cusp of a lot of great things about to happen, and we've been moving in that direction. The trend line is in that direction. The issue is it can't be a 20-year trend line that takes us there. We've got to start moving it at a more rapid rate, and I think that that's happening. I feel like if we stay disciplined, and this is the other thing about and my job, especially in investing. See, we don't have to be Warren Buffett said, you don't have to be right all the time. You have to be more disciplined than the rest. And so you have to stay focused on what you think is actually going to happen. That stuff needs to happen. And I think that's what that opportunity is opening up to now. But
You said we should make in India. I agree with you. I mean, before the election, I traveled around UP and everything, and UP is a very young state. I mean, probably the median age is 24 or 25, still very young compared to the rest of India. Uh, for manufacturing, we need skilled labor. And I mean, because you mentioned EVs, and when you say EVs, you'll probably have a lot of manufacturing. Of course, the physics and chemistry side, you'll have the battery chemistries and the hardware there, which is a very different skill set. For just manufacturing alone, do you see? Like you said, we're just moving, right? We're just moving. In the last 20 years, I think Snigdha would remember in Business World, we ran a story called "Educated but not employable." Educated but not employable. We were the first ones to write about it in the country, and it still continues to this day. It's a very difficult dynamic. How do you read that? Because I also want to ask you: have you ever looked at EV and other manufacturing to consumer, like brands? Have you looked at that space at all?
I think you hit a couple of topics. Let's talk about education for a second, because this is a big issue, and it's a tough nut to crack in the sense that education is one of those things that seems like it should be a basic human need and a basic service that's offered. Now, when you start to get into it from a business standpoint, I think you start to pervert the incentives around it. And I have a challenge just from a personal perspective when I think about education and healthcare, and I think about investing in those areas. You want to make it as broadly available as possible, but you also know you want to try to build a business there. And so, but I think that there are pockets to play in that make a lot of sense and that play to everybody's requirements. So let's say upskilling. I think that to this point around manufacturing, we're going to need people that are going to be able to function in these environments in a skilled way where, and that's why I'm actually beginning to wonder, and I have a fundamental question on whether the format of education in general makes sense for our needs. So 12 years school, then 3-4 years college, then you go do this. I mean, I don't know that everybody needs to follow that trajectory. I think that there are opportunities to enable income generation for people where they can be skilled in certain ways, vocational training that can work, that can enable them to be contributors in their households, that will probably require a different format of training and can probably be done in a much more scalable manner. So now you start to get into things like AR, VR. You start to think a lot more about technology-driven training for these people sitting in various parts of the country. And I think that can happen. So what's interesting when you kind of project forward is everyone can get a picture of what the end zone looks like and what the end state will be. The challenge is always going from here to there. And if you go the wrong way, you burn a lot of money, you lose a lot of face, you lose a lot of ground, you don't necessarily make it. But you'll eventually, again, it's that trend line. It will eventually get there. And some people will make it out of that and some people will get there. I am I would say quite disappointed with how education works today to enable that. And I'm not sure that we've got it, which to me, quite honestly, one of the statements we make in general is India is inefficiency at scale. And I think that presents opportunity that's unparalleled.
That's very well said. Inefficiency at scale. That is true. I mean, I don't know why we are not able to shake that off.
But that's what allows for opportunity, right? You show up in Singapore, you show up in Dubai, things work. There's no opportunity. I mean, it's great. It's a fantastic place to live and have a good time. But if you really want opportunity, just walk outside here. I mean, everything has presents itself with something that can be done a little bit better. And I think that that's what is encouraging and exciting about the opportunity that exists is you're going to have people that want more, people that demand more from the products and services, and the system is not built to enable that yet. And that's where you can start creating cool stuff. And so therefore, EV, yeah. I mean, let's talk again about manufacturing and in that context, bring it to EV. If India decides to start growing and consuming at the rate that the West does, the world will get broken even further. Um, Climate crisis will get worse. We cannot afford to produce the way other countries have in the past. And so therefore, and it's great, the countries set certain targets for emissions, certain targets for renewable energy, all of that is there, none of which I think can be accomplished with the current mindset and approach that is at play. So we're going to have to find new and innovative ways to do it. And I think that you have large companies, and let's look at it. We've leapfrogged in so many areas in the past. I mean, the biggest and most apparent one is connectivity, right? We went from a world with no landlines to a world with
Yeah.
the most data consumption on mobile anywhere. So we gave up landlines entirely. I don't even have a home phone line at home. So
Absolutely. And I don't even think many people have seen laptops. Seriously, they straight away complete phones, right?
exactly. And so we know that this happens. And if you go back and think about it, in 2010, 11, if you said that data prices would be at the level that they are today, I remember going to the US and talking to people there. Everybody was freaking out about their data costs and
Yeah,
changing mobile
Adam.
data costs. Oh my God, my data costs, my data. And in India, it's just like, yeah, cheap. It's free, essentially. Connect. Don't worry about it. I mean, it's crazy how far we've come and how fast we've come. And I think you look at UPI, you look at the entire Aadhaar platform, you look at things that can get enabled by all of this stuff. We're going to skip steps. And so in that context, I think that given the scale that the market presents, it's very likely that we will be the leaders in terms of how green energy will be produced and consumed. Not because of the fact that we're so smart or anything else, but because we have no choice. If we don't, we're going to burn the entire country to the ground just based on poor manufacturing practices. And you look at it today, companies like Jindal, companies like Reliance report on metrics that are ESG oriented without somebody forcing them to do so because they've realized that it's also such an important part of what the world is going to be. So you have that standard being set, that direction being given. You have money that's ready to come in behind it. You have, once you establish a certain scale, the price point drops dramatically. I think we'll see a rapid growth in all of that and a change in the entire face of how mobility, let's say, works, which will happen
Absolutely.
here faster than elsewhere.
No, Sandeep, so much happening in India. So your three funds, I know the last fund was 2018 or 19, I don't remember, 200 million plus, if I remember correctly. Will the thesis change now? Because there's so much we're talking about. Will the thesis just be, okay, we look at consumption, maybe we look at the full chain of it. Maybe companies solving, like I said, manufacturing to brands. Maybe we look at deep tech. Deep tech is the flavor, by the way. Everybody's talking about it. I don't know why. I don't want it to become another fad. It's hard to do deep tech. And like you said, we need investments like they did in Vietnam, to enable that kind of ecosystem. So what is your new thesis? I know you've been quoted in the press recently of $100 million fund. I know, where are you heading with the new thesis? Is there a new fund coming in at all?
Yeah. So I guess again, maybe it's a bit helpful to start from where we started to why I've gotten to where I've gotten to. So when I
Absolutely.
came in 2005, I think the idea and the intent was, and we got to remember, 2005, no mobile phones, internet connectivity was low. The model was we've seen tech businesses have an impact in certain verticals, and again, let's talk about why venture dollars are relevant and to whom. Venture dollars are relevant when you're not independently wealthy, you don't have a set of friends and family or a trust fund that's going to give you all the money that you need to build your business. You don't have assets that you can borrow money against. So when all of those things don't exist, you're kind of in a world where you're building software and you're kind of saying, okay, who's going to loan me money against a line of
Services.
code? So
Yeah.
I've got to talk to somebody who's willing to give me money. So that's where venture made its sort of existence at the beginning. And if you go back and think about the US and the venture ecosystem there, the logic was, if I invest in this guy who's building this software, if he builds it once, whether he has one transaction, 100 transactions, or 100,000 transactions, the incremental cost is negligible. So there's this opportunity for exponential growth in earnings. That's what's exciting. So that was the start of venture. Venture over the years has gone from that to $40 million Series A investments in stuff that has yet to be proven out, and massive amounts of capital going into areas that have no traction or reality. I mean, it's changed in its profile, but I'll come to that in a second. So in that backdrop is when I came here, and I said, okay, look, that's the kind of stuff we want to build. So InfoEdge fit that bill perfectly. A classified listings business, a platform, it creates growth in how that system works. ClearTrip fit that. Map My India fit that. Paymate fits that. So all of that was tech and pure tech businesses. When we set up Lightbox and we started to think of the market again, we started to understand that this fragmentation enabled or required brands to be built to be distributed. So you didn't even have enough of these things to actually get out there. So now distribution was going to be a big boy game. It was going to be one that would consume hundreds of millions of dollars. So instead, let's actually build the brands, and let's apply that analysis that I mentioned earlier to say, look, how are you better than anybody else that's going to do this? How is furniture rental going to be a better system than furniture sales? How is a QSR business going to be better than a restaurant business? How can we? And so we said, look, I can own product margin and distribution margin. And that was the first realization that we had that said, okay, we don't have to be just about the tech. So the tech is an enabler, but it's not the only thing. And that took us then to those set of businesses. Along with that also came an understanding that brand is a massive lever. A massive lever in saying that, look, if I'm going to sell you this pen and you're going to sell me that pen, you're going to pay more for this pen because of the brand. Now, how do I create that brand, and how do I ensure that I can extend that, grow that, build that out? And so then we started to say, okay, our businesses are going to use tech for operating leverage and brand for margin expansion. And this kind of became a big part of the framework. Then we got to fund 3. And by the time we hit fund 3, again, you can kind of say age hits, you start to look around, you realize that the world is kind of burning in many places, and you start to say, look, I want to build businesses, and we're going to impact how the next billion people consume. Let's be a little bit thoughtful about it. And I'm not saying we should be an impact fund or we should be the ones that are going to save the world, but we can definitely be smarter about how we ensure and hold ourselves accountable and our businesses accountable for making sure that they're improving the world around them. So that took us into a Waypool. It took us into a business like Zeno, which is in the pharmacy space, selling generic medicines and saving people money on drugs. You start to say that I can apply that lens as well on this. So that took us to there. Sitting here today and having reflected on that kind of journey that we've gone through, if I look at it, I feel like the venture market in India, that first thesis is going to be very hard to build businesses around. This idea that I'm going to invest in the tech platform. Why? Because the Amazon of India is Amazon. The Google of India is Google. The Twitter of India is Twitter.
Yeah.
The AWS.
They've cracked big here.
We're an open market and we'll let people compete, and that's fine. And that is what it is. But like I said earlier, our inefficiency at scale presents unique opportunities that are India unique. I can build a Rebel in India, or Jaydeep can build a Rebel in India more accurately, because there are not scaled players in the QSR world that people have their preferences for. We now have the country's largest biryani brand in a country where biryanis existed for decades. There's no one who scaled it up. There's no incumbency. So the inefficiency at scale, the lack of incumbency has now meant that you can actually create those businesses. Let's take a simple thing like HDFC Bank. In the last 10 years, HDFC Bank, I'm not talking about a fintech. I'm talking about as basic a bank as possible, and they have tech and all that, fine, but their service is a bank. They've gone up 6x in 10 years. At scale, $30 billion business to $180 billion business. That's happening in basic services. I'm looking at this, I'm saying, at the end of the day, as much as I will say Rebel is a tech business, all this, it's a restaurant. It's a restaurant. Let's say Bombay Shirt Company, as much as a tech apparel, it's an apparel company, right? So these are fundamental products and services that consumers are going to have needs for that don't have brands. And you have the opportunity to sit here today and build those brands. That to me is really exciting. So I would say that the philosophy going forward would be to continue to identify those, go in early, work with them, ensure that these tech levers and brand levers exist, and then just
It's
build them out.
fantastic. So would you say they should be in the revenue stage of at least 50 crores to 100 crores to really say that, hey, Sandeep, I want Lightbox to look at this? Or what stage of revenue should they
Oh,
be at? There
so
are
I'd
many
say this
brands
is
like that. I meet many brands, but they still behave like traders, and that's my problem, man.
the problem. No, and I think it's a DNA question. So I think that look, and there will be people that will look. What's been the latest? I can game Amazon and figure out how to grow this business to a certain point. So I can get to 20 crores in ARR, or even maybe I can even get to 10 million in ARR, right? I can build a business to a certain point, but are you going to be able to build forward beyond that? Are you going to be able to scale? Do you have a differentiation? So I'll put it this way. I think that necessity required us in 2005 to write checks that were to business plans. So when we invested in ClearTrip, it was 5 guys in a PowerPoint presentation. By 2012, we found a couple more that had some traction, but still we were going in very early. By the time we got to fund three, we could get to Zeno after the guys at Whiteboard had actually already put in 3 million, built it to a certain point. They had 30 stores. They had proven out some stuff. That's a nice place for us to come. Because I think then also that's a nice place for our understanding to actually be useful to a business. And I think some of the thought process, the mindset has kind of been evidenced with people. And to say that you're not a trader, I've done this. This is why my tech is better. This is how I've done it. And I think that that's the point at which we can add the most value and get. Because look, today, I'll tell you another thing that has come to my front. I think that as a venture fund, we're a service provider. And I think that it's important to recategorize that. And I think I get a little bothered with the representation of what venture investing is in popular media. Let's say it's a deal junkie. It's a negotiation. It's a this much equity for this much money, and that's all it is. It can't be that. I think that the entrepreneurial journey, and look, I ran ClearTrip for many years. You came to the office, we met there. And so if you kind of go sit in that shoe, it's a very lonely place as an entrepreneur. You're in that shoe today. You're building a business.
It's very hard, yeah.
No, you don't just need money. If just money solved the problem, every big company would solve everything they need to, and we would have no startups. I think you really need to be able to work with somebody as an entrepreneur who can take on this stuff. There was a comment made by somebody that being an entrepreneur is like chewing glass and looking into the abyss. And the statement of that is chewing glass because you're doing everything you don't want to do. You set out to be an entrepreneur because you love things. I mean, we were talking earlier, you said that this is your passion area. You've managed to preserve your passion area, but what pays the bills is a very different set of things. Maybe you get some joy out of it, but you get a lot more joy, let's say, out of this time.
Absolutely.
And you need that, right? But you have to do the other junk because that's something. And when you're building a business, you may not be a finance or accounts guy, but you have to do it. You might not be a salesperson, but you have to. You might not be a marketing person, but you have to. So you have to do things. Now, and staring into the abyss is the idea that, look, you're going to die at any moment. You don't know when it's going to happen. And that's the reality of life. So now, again, if you go back to why you decided to raise private money, it's because you're not independently wealthy, you don't have a rich uncle, and the bank's not going to lend you money. So now you brought somebody in to share your vision. That person can't be a freeloader, in my opinion. That person better show up with something significant, tangible, and let's not just say it's, oh, I'm a nice guy and that's what I'm doing. So I'm now very much, and we will now start to articulate much more clearly, what are the services we offer? I'll give you an example. I think that governance is something that is just overlooked. It's overlooked and disregarded, and people see it as that's my legal guy's problem. But you think about it, governance sets the tone for how you approach every aspect of your business. If you can't care about the things that are black and white, what makes me believe that you'll care about the things that are subjective and subjective enough to deliver a great customer experience? Let's make sure we do these things well. Let's make sure we set incentive structures in place for the entrepreneurs correctly. Let's make sure we do our reporting correctly. Let's make sure we think about the evolution of our employees correctly. That's what governance is. Governance is not a bunch of reports that you file with the with SEBI or with the companies.
You're talking about accountability and transparency. I mean, it should be ingrained, yeah.
And can we not standardize how that happens? So we're doing that now. We've actually launched recently a couple of things that we're going to make very public about how we're going to assess our companies on governance. And if we can implement that as a framework for every business going forward, that strengthens who they are. Business optimization. We talked about data. You talked about the idea of everyone thinks about data. Data is such a vague word. and analytics is such a vague idea. We've now set up a system whereby we're now running specific, think of it like an IT services group, running projects across our businesses. So I'll give you an example. We looked at Bombay Shirt Company and we said, okay, based on the analysis of where people are coming into the website, how can that direct us on where we should open up our next set of stores? How do we set up the system that enables that? Once we did that for them, we did the same thing and gave it to Zeno. We did the same thing and gave it to Nua as they're thinking about launching physical retail outlets in places.
So do the entrepreneurs appreciate it, Sandeep? Sorry.
This is it, right? Like when you talk about being operationally engaged, one of the questions I often get from LPs is, do people care? Do they want that kind of stuff? And people don't want you. Look, you're an entrepreneur. If all I did is show up and ask you every day, how's revenue? How's revenue? How's revenue? Why is it not growing? Why is it not happening? That's irritating. But if you show up and say, hey, listen, here are things that we can do to change stuff. Here's stuff we're going to actually implement in your business, and I'm going to help you do it. I'm going to give you, then you will then own it. I don't want to own it. So I think that's the evolution of what it needs to be. And that's, in my opinion, where I think you can really differentiate.
This is good. You can differentiate for sure, because a lot of the brands that come to me say that, look, can you put us across somebody who could help us fix our operations, because the product's really accepted in the market, but we don't have people helping us with these processes that can help us scale 10x. Is it because, I don't know, I mean, is it because the entrepreneurs doing everything and therefore the processes have been wrong and hence they're not able to control their operations? Why do they go wrong? I thought they'd figured it out. Or is it because they're trying to do everything themselves? They have to actually go hire people who can do it, or tie up with a fund like yours?
There's a statement that startups don't die of starvation, they die of indigestion. And I think that's kind of the problem. You sit there and you say, you are searching for, you start by saying, hey, I think that I can address this market opportunity. And you start here and you realize, wait a second, I'm not getting enough traction there. Let me go over here a little bit. And then let me try this side here.
Yeah.
And let me grab this. And then you've got 6 different things running. And then you realize that, my God, none of them is actually, oh, wait, that one seems to be working now. So you create complexity for yourself. And you do it because for all the right reasons. You're saying, look, I'm not exactly sure where it is and I need to go do these things. But that also puts you in a place where the complexity of the business is larger than you envisioned at the beginning. The systems have not been set up correctly because you never thought about systems, because you were a person running a thing with an idea. And then now suddenly you found yourself in this place where I do have traction. I am ready to go. But now how do I unwind some of this nonsense? How do I put the structure in place? And how do I retain my nimbleness in that to continue to go after the things that work? And now I want to address the other side of that equation, which is, why aren't funds doing more of this? Why aren't funds then saying, okay, this is what we should do? The system for a fund is also a rather perverse set of systems that are set in place, right? It's not driven immediately by the success or ensuring the success of the companies. It's driven by ensuring the growth in the perceived value of the business. So the growth in the perceived value of the business comes by a set of metrics that are hot for that moment. So when users are hot, let's just grow users. Forget all that other nonsense, let's grow users. Nobody cares about customer acquisition costs, let's just grow. And that's why the whole system, if I go back a couple of years and look at this, I think that everybody lost track of the idea that we're building businesses. We started to believe that we're building money-raising machines. And that became the metric of success. How do I raise money? How do I raise money? And that became the metric of success for funds as well. Because what would the question get asked of me? Okay, you raised $200 million. How is that fund valued today? Now, if I told you that I really don't know or I really don't care, but the businesses are doing well, that's not a good answer. I need to know that.
I mean, yeah, I agree. I think the media won't like it. So because, for sure, I've seen that if you announce your next round, they'd be very happy, right? It's true. I think an entire school of entrepreneurs, Sandeep, has been schooled on raising money only and not building businesses. And I think I've done injustice because I've reported about entrepreneurs like that. And now suddenly the VC ecosystem saying, hey, they're talking like you. They're saying we need to be helping these guys grow. I had a fund. I mean, I'll probably send you that podcast after this. They're saying that they want to do the same. They're a SaaS fund. But it's interesting how this conversation happened. But do your LPs like it? I know you guys didn't do any investments during the pandemic. Yeah? At that point, you were quiet, watching the fun happen. A lot of money went in. And now we know the reality, right? So what are your thought processes on this new narrative? Is this a new narrative, or have you been saying this for a while that look, let's invest in businesses that generate cash and not users?
See, we have our strategy is go in early and have a concentrated portfolio. This is sort of like suicide in the venture space, right? You're saying I'm taking all the early stage risk and I'm only going to do it on 8 companies. And so if I'm doing that, the logic has to be to say that, look, I'm going to get into businesses where there's a logical business model here. I can't be taking crazy risks. So I'll give you an example. In Fund 2, we invested in a company called Haiku Jam. Haiku Jam was an interesting product that was trying to get people to collaboratively create content. So you write a line of a haiku, I write a line in third person line and create something interesting. We thought it had user traction, let's do it. But we put 1% of the fund into that business. So it was a negligible amount and we took a chance on it. Everything else that we did was logical business models where you had numbers that made sense and products that made sense. Where we failed even in those was where we lost sight of the fact that we should have been building a business and got wrapped up in raising capital. And I think so therefore, I think that in general, so you're asking a question, is this a new idea for me? No, it's been how we've had to think by a function of the structure of the model that we have. What you're not immune to, and this is the other problem, I think, and that's why I said earlier, you don't have to be smarter than the rest, you have to be more disciplined. You have to not get caught up in the waves of sort of chaos that come and the hype that come. Look, like I said, I've been doing this long enough to believe that as rational as the world is today and as rational as we are talking today, it will take open AI going public and raising an insane amount of money in some way to get everyone to believe that the floodgates are open. Every company that's an apparel business will put .ai at the end of the business, and suddenly we'll be off to the races and the market will be hyped again. And it's a cycle. It will happen. When that happens, you got to keep your head straight and you got to stay focused on what you're doing, and that will end as well, and it happens continuously. So I think that if I were to and to your question on LPs, it's a challenging one. I mean, venture as an asset class is a challenging asset class. It's the outliers in the asset class that do well. It's the outlier years that do extremely well. And so the average cannot be your approach. Yet the mindset is to say, what is the average strategy? What is the average thought? The average thought is tech businesses, early stage tech. That should be the only answer. So when I show up and I start to say, look, let's start investing in a business that's, like I said, making apparel and building stores. A business, again, take a business like Bombay Shirt Company. Its revenue per square foot is 3 times the industry average on a retail footprint. I should just keep opening stores. And think about it. Carrot Lane built a tremendously successful business that generated great returns for people, building a physical retail network. So these are real opportunities. This is where it exists. Now, if I have to keep convincing somebody externally about that, that's a painful journey to be on, which is also why, by the way, I'm finding that domestic capital opening up to this segment is really interesting. And I think that that's going to be good because I think that overall that should be who benefits from the growth of these businesses. It should be entrepreneurs in India that have made money in India, reinvesting in entrepreneurs in India. It should be institutions in India getting exposure to this alternative asset class that make money in it. Why should it be foreign pension funds? Why should it be foreign sovereign wealth funds? And so I'm very excited to see that opening up. And I think that that's going to be an area that we're going to start to tap into a little bit more going forward. And I think then that story becomes a lot easier to tell because it'll be people like you sitting here. I see it. I feel it. I get it. It makes sense. So.
It's amazing that you said Bloomberg's just put out a report that India is churning out a billionaire every month or every 15 days or something, which is interesting that there's so much domestic capital that can come into startups here. And how tough is it for you? I mean, if you compare American LPs at this point of time, I wanted to ask you a global question and bring it down to the domestic. A lot of the LPs abroad, do they think, some of them tell me that, they think that India is expensive or overvalued. You see the market's really growing, but then they tie it back to whether we have the manufacturing capabilities, whether we have the skills. They tie it down to that. And then you have a general tightening in America. The Feds have not loosened rates yet, and then Japan going it's in its own. I mean, Japan's now tightened rates right again. It's interesting to see the world is really fractured, And then here we are with domestic capital still. I mean, we talked about it even 15 years ago. I remember talking to all Mondas Pai and all of them saying that there should be more domestic capital. It's only now that they're thinking that, okay, let's do something within India. So how do you see the global cues and the local cues at this point of time?
Um, so, we, after the elections, actually, in Indian elections, we, we had to reflect for a second. And I'll come back to your point on because I think I want to say why the global scene matters a lot. We sat down and we said, okay, wow, we went from two terms of majority leadership to now a question of a coalition. And like, okay, the first thing everyone is going to ask everywhere we go outside is, what does this mean for the markets? What does this mean for the growth of the country and everything else? So we went back and looked at all the governments of the past, and we looked at two things: market returns and GDP growth. And outside of the last two governments being majority, everything else was coalition. Every other coalition government, the market growth rates were as good, if not better, than when it was a majority government. The GDP growth rate was as good, if not better. So what does that tell us? That the market and the economy kind of does what it does. There's a limited amount of meddling or messing up that can happen. So then you say, okay, what does impact it? And when you start to look at what impacts, let's say, overall market returns, there's one factor: interest rates. Now, when you look at those interest rates, and if you go back and think about when Paytm went public, when all those IPOs happened, then interest rates were at their lowest. When they were at their lowest, you had the largest IPOs. You had massive oversubscription, very big size IPOs, and very large multiples. And you look at the crop of companies that went public at that time, where they're trading at today versus what multiple they went out there, they're much lower. Then you look at the last set of businesses that went out, your Mama Earths, and that whole group that just went now. They traded at a multiple. They went out at a multiple and they traded at a multiple that's very much in line. So interest rates were higher but stable. Multiples were more in line when they went public, and therefore they stayed there. So now, okay, given all of this, what does that mean? We'll come back to say that risk on happens when interest rates drop. Indian interest rates are 95% correlated in the last 5 years to what happens in the US. So now, okay, you have all this stuff and all this uncertainty there. Now, I was in the US recently. You ask anybody what's going to happen with interest rates, nobody knows.
Yeah.
Literally nobody knows. Right?
Inflation also,
Now,
nobody knows what's going to happen there. Yeah.
now you look at that, there's all the right reasons why interest rates should come down, but all the other reasons why it won't. And you kind of say, okay, well, at some point it will. So let's park, whether it's today, whether it's tomorrow, whether it's next month or next year, at some point. When it does come down, interest rates here will come down as well. As interest rates here come down as well, the appetite for more risk will increase. And that's a cycle that will happen. So it's inevitable. And so again, I'm not as worried about predicting when things will happen. It's more questioning, so what will happen, and then be ready when it happens. So that will happen, and that will happen at some point. And when that happens, that will be the right time to then bring in more capital into more businesses, and that will be the right time for us also to look at taking in more capital as a fund, and that's when. So you were asking earlier, we referenced the idea of a $100 million continuation vehicle. Yeah, look, we think about liquidity options for our businesses in all sorts of manners. Continuation funds are one of them. And yes, we'll explore it. But I'm under no, and I think you have to operate in general with this mindset that you're building good businesses. Then you don't worry about the pressure. I think some of the most successful investors in India have been the conglomerates. They don't care about other people. They build business.
Absolutely. They just build, yeah.
They build for what the market is, and they can care less. And what's amazing, I'll give you a couple more things. Indian liquidity in India for venture investments will come when businesses are profitable. That is clearly the best way you can. Liquidity for anything. If you want something from someone, your best chance of getting it is when you have multiple options, right? When I don't care about whether I get this or not, then I'll get it that way. Today, options for liquidity come from either going public, from selling to a strategic, or finding a upstream financial investor that wants to own your asset. Public markets care about profitability. Look at Zomato's share price. It goes up when they're profitable. It goes down when they're unprofitable. It's very clear. Okay, they care about profitability. Strategics. We looked at it. In the Nifty, I think the median ownership is promoter ownership is at an average of about 36% across the Nifty companies. Of the $50 billion in dividend income that got paid out in 23, 16 billion of it went to promoters. These promoters care about cash flow. That's it. They're not interested in your future story. They don't care about the stuff that I talk about. It's going to change the world. It's going to revolutionize everything. Like, great, call me when it does. When it does, we'll have a great conversation. We'll talk about it. Until then, leave me alone. And so you want them as an option, get to profitability as a business. Financial guys, your Chris Capitals, your Kedaras, your bigger guys, they're also very straightforward because they know that they need to sell to one of these places. Like, dude, show me that it makes money. They'll take a random bet here or there on a set of things because maybe they want to understand it, get exposure. But their bread and butter is made based on investing in, buying into businesses that make money. So now I want liquidity for my companies. My best chance is to create options for it. My best way to create options is to create profitability. Which is why I was talking to an LP in the US, and I was saying, look, I only have one problem in life. I don't have to solve, I don't have a market problem. I have a market that's growing. I have a demographic that's exciting. I have a per capita income that's increasing. I have a consumer that wants more brands. Everything is working for me. Only problem I have to solve is build profitable businesses. That's a very tangible, possible problem to address. And that's it. So solve that and you create options and you have liquidity that comes about. That will be the fuel that makes this work. And that's also why I was saying earlier, the types of businesses to build are these, because you can build them profitably. Nua, our sanitary pads business, is now a profitable company. The amount of interest in that business has skyrocketed. They just turned profitable. But my God, I've seen the tone change and the approach change to that business. It's huge. I mean, so, these are, I think we overcomplicate our lives. Like I said, I have
No,
one
no, well
problem to
said.
solve.
So you're saying so India is going to be an opportunity for a long time to come, and regardless of the global financial risks or geopolitical political risks, India has got a lot of things right, and it'll continue to be interesting for LPs. That's what you're saying, right? But look at cash. But people want to look at cash. That's the truth, right? Now.
I mean, you need to generate returns. I mean, this has been the biggest problem in India has been like Hotel California. You're just kind of, so we have to change that. And I think it will change. I mean, you have great quality businesses now. If I look at Lenskart, for example, they've shown the type of business that can be built in a mixed opportunity. And I think that those returns will give people comfort. Those returns will give people the conviction. And honestly, quite honestly, I'm actually beginning to believe that whether the global guys find it or not, and like you said, here's the challenge. A global guy sitting in the US is saying, I get great returns here and I don't have to get on a plane or be on a call and not out. And equally for an Indian guy now sitting here as a fund manager, I can say, you know what, I find great capital here and I don't have to do it by getting on a plane or getting up at weird hours. Probably addresses everyone's needs in a more effective way. And so I'm pretty sure that over the next 10 years, you'll see a greater migration towards more domestic capital with people that get the market and see the opportunity. And so be it.
Yeah.
And that will be how we grow.
So you're right. You can step out anytime you like, but you may never leave. So India is that story. I agree with you completely. So let's see. I want to talk. I mean, I've been a fan of a couple of your startups because I've also hosted that person, the founder, on many panels. And when we asked the crowd that who uses Dunzo, for example, everybody would raise their hand. It was just a sad, sad story to see what's going on. Uh, Everybody used it. Even my mother used it. She's 72 and she used it. So it was just disappointing. I don't know why such things are happening in India, and it's really disappointing. What are your thoughts? I mean, great entrepreneur, but what happened?
Yeah. I think again, if I go to the start of the story, right? Dunzo and Kabir started as a WhatsApp group, and started as a WhatsApp group
I
solving
remember
needs.
that. Yeah, I remember that. That's how they raised money too.
Yeah, exactly. They raised money from people that way as well, and so it was. So I'll give you a conversation that we're having internally now is really around what happens when you're not today. You sit there and you run your business. You operate with a level of urgency, frugality, and aggression that is just unparalleled. You wake up in the morning worried about every problem. You prioritize. Your ability to prioritize is almost innate because you feel it. You know exactly what's going to happen. You know how to move it. Now, I think the minute you raise capital, you feel this sense of I've grown up. I now have an organization. I need to align people. I need to ensure that we operate in a manner that is structured and orderly and people understand it, I don't necessarily just feel and do it in the same way. Now, that brings with it, and we talked earlier about sort of the complexities that arise as the business starts to grow up and has to start finding different points of actually of improving what the model is going to be. If Dunzo ran as a WhatsApp service, it would continue to probably do extremely well. It would be at a certain scale and it would operate in a certain way. When you decide that I'm going to be a big company, when you decide that I'm going to go after things, you add complexity to the entire system. I think with that comes, sorry, with that comes, sorry,
Take your time.
there. With that comes the challenges of saying, look, am I focusing on the right things the right way? What is the market signal giving me for this business? So let's take, if I take e-commerce to begin with. E-commerce was a business where it's really hard to make money. And you look at who's survived in it now, you've got two large global players and India's largest company. These are the people that have the wherewithal to fight that fight. I think quick commerce is similar in nature. It's a business that requires a lot of capital and that's going to be played in a very different format than the logical, methodical manner of how you build, let's say, a Bombay shirt company or a Rebel. So, and in that backdrop, you have to you're playing a very dangerous, scary game of chicken, so to speak. You're running down that path, staring at that abyss, and hoping that something's gonna happen at the last minute and blink and it's all gonna work out. That's it's tough, and
Yeah, it is tough.
sometimes get out of that. And I don't know that there's a different way to play it. I think that if you look at the guys that are in it right now, they're running in that manner. I mean, Zepto's raised even more money now. This is the
Yeah.
game you have to play. You don't know, and so sometimes the stars align, and sometimes you're in a business that gets blessed at the right moment in the right way, and sometimes you don't. And sometimes for all the brand equity that you built and for everything else, it becomes really hard. Unfortunate part. So
Yeah, got it. Yeah, sad. Yeah, moving on. I want to talk about next 18 months for you. Uh, you're looking at great company again. Would you look at fewer companies? Just say, do you get a lot of people calling you, but you cherry pick those you like, because you've done only 14 or 15 in India, right? Investments.
yeah, I, I don't. I think that as a person, for me, once I've invested in something, I'm very personally invested in it, emotionally invested in it, I care a lot about it, and it's sort of that again. That's our entrepreneurial journey within Lightbox is one of we wake up every morning and the priority is how are our existing companies doing, not what haven't we done or what else is there to be done. And so that you only have a certain amount of energy to give in that kind of framework. And so you can only do that with a certain number of businesses. And therefore, we spend our time, everybody here would say spends 80% of their time on the existing portfolio, 20% thinking about the future. And that will be how it goes. And I think for me right now, the story I laid out for you, the vision that we kind of believe that the future will be, the kinds of companies we want to do, we want to refine that further. We want to articulate the services that I've just said to you in a crisper manner, in a more tangible way that any entrepreneur, whether they take money from us or not, really would like to have those services as they build their businesses. That's where our attention is right now. Make it work within our current companies, articulate the service offering in a clearer, crisper way where we can maybe even consider engaging with companies to provide that in a different manner than just as an investor. And I think that should be where it is really valuable. And then the money is secondary. I have to believe that somebody, I'll put it this way, I have to believe that somebody be willing to pay me to provide that service. Not that we would ever do it that way. Then I believe we're in a great place to really say that, look, as a proposition, we have the right proposition to continue to build out with the next set of businesses. So that's the focus right now, making those two things happen.
Okay, and in conclusion, quickly, are you still playing your music? Do you get time to practice? I hear you're quite a good DJ, but what do you? I would like to know what
Uh,
music do you listen to? I mean, what inspired you in music, number one, and what made you a DJ? Do you still DJ? That's another thing that I want to ask you.
I'll tell you this. I moved the turntables into the office actually, because I decided I don't have enough time at home to do it, and I hope that it would inspire some people here too. So years back, I actually went to Tomorrowland in Belgium, which is a great music festival for EDM. Got very into it then. Since then, have been, I guess the genre keeps evolving. It's I have two kind of ends of the spectrum. One is harder EDM, and the other is more what I would say tropical house. But the reality is, to be a DJ, like any instrument, requires time and practice, and requires knowing your music. And unfortunately, I think I've lost the time to be able to do that. So therefore, I brought it here with the intent of other people doing it. What I have increased is more of my sporting activities, because I realize that as I get older, that becomes a little bit more important. So between basketball and surfing is where my time actually goes nowadays. And so that's where it'll be. But yeah, I'm very encouraged by the kind of acts that are coming to India. I wish the venues would improve, quite honestly. I think that's the bigger issue. But I spent last December in Goa, and we saw some great acts there over New Year's. Like I said, I would go to more events here, more acts, but I don't. The venues aren't at the level that makes it compelling.
I agree, and I really wish you all the best, and I hope you get time. And the people watching this apply at Lightbox. Maybe you're at some scale before you apply to Lightbox, because they're not a startup fund. They're not a seed fund. They probably come and participate at the Series A and B. Correct, Sandeep?
Correct. Yep.
Right,
Yep.
but all you brands watching this, I know a lot of you know me as a reporter who's covered retail and tech. So when you write to me, do come with some scale, because then I can pass it on to Sandeep and team. Thank you so much, Sandeep, for being part of this. And next time I'm going to host you in my studio, and we're going to talk a lot more about music and a lot more about brands. Thank you so much.
No, thank you. It was a great conversation. Like I said, I'm hopeful that these are the kinds of conversations we can put out in the world more, because I think you're doing a great job of actually telling great stories about what's actually happening, not just the numbers. So thank you for doing this.
That's heartening. Thank you.